Hey everyone, welcome to this week's Finquinity podcast. Today we're doing something a little bit different. We brought a guest speaker and his name is Raaj. Raaj, why don't you introduce yourself?
Hello, thanks for having me. Yeah, I'm excited to talk about the stock market. Let's do it.
Okay. Yeah, so before we ask some questions to Raaj, we're just going to talk about some of the things that has happened this week, including some of the macros, especially the FOMC meeting.
Man, what a meeting that was. I watched the meeting. I didn't get a chance to watch all of it, but I did watch the meeting, and it was one of the most dovish meetings I've heard in quite a while. I think the most dovish meeting I heard in maybe 2 years. And we in fact did get did get the rate cut of 25 basis points. And from what I gather in the meeting, the second rate cut is pretty much guaranteed at this point. It's either going to be, is it end of October and December? And in fact, there was even some discussion about a third rate cut, which is, I think, why the markets are bullish as they are. Just to kind of recap what happened in the meeting, it was, once again, a confirmation that tariffs, according to Powell and the Feds, might not be as big of a problem, and the problem is developing slowly. They feel very confident in being able to react to the changes that it might bring around, and so they are more worried about the labor market, which they deem has the most impact right now, with a unemployment rate that hasn't changed across the year, still sitting around 4%. And we're seeing a labor shortage in both demand and supply. And so the rate cuts are happening because of that. I gotta say though, these rate cuts are happening at a very interesting time. The markets are at all-time highs. And to see a rate cut happen when the market is at all-time highs is exceptionally rare. I think I heard a stat it's only happened a few times, a couple times in the last 30 years. And I think that's just very, very strange. Very, very strange. I want to hear your thoughts and comments about this.
Yeah, so there's a specific reason why they are cutting rates at this particular time, when the markets is kind of going up every single week, right? So one of the biggest reasons is the AI boom. We have not gotten such a big technological boom in, I think, over 20 years. The last one that we have seen so far was the dot-com bubble, when during the 1990s to early 2000s, you have the internet, where every single company was starting up, and it was monumentally rewiring how the US economy was going to operate.
Mm-hmm.
So during that decade, that was when Alan Greenspan, so the chair of the Fed back then, he decided to cut rates, and that led to the bubble expanding just as large as the one that we're seeing right now.
Mm-hmm.
And, tying back to what happened then to here, the circumstances that are happening right now are quite different, because there is now genuine labor weakness within the economy. So we kind of touched on this a couple episodes now, but just to reiterate what's going on, in the transcripts, the Fed believes that there is now a focus towards labor weakness over any inflation risk. There was a 900,000 job revision downwards over the last 12 months. And according to Powell, he basically said, we want to cut rates proactively to ensure that the labor weakness doesn't deepen. And I think the second policy on top of this AI boom that's kind of masking the labor weakness is the fact that you have, strong GDP growth, but with anti-immigration policies. So you have this, this new policy where illegal immigrants are being deported, and you also have skilled labor having to pay exorbitant fees in order to get a visa. Is that right?
Yeah, I thought it seems to be.
Right. Yeah. So there's now a shortage of labor. And while that's going to cause increased rates of probably wage inflation, we're looking at, quarter to quarter GDP growth. It's still pretty strong. It's around 2 to 3%. I think that, if I search up the US GDP now calculations for the forecast for this quarter, it's around 3.3% for Q3. And that's after all the tariffs and illegal deportations that has already happened. So essentially what's going on here is that the Fed is pivoting to labor weakness and to easy monetary policy in a economy that's already grown very strong, relatively speaking, compared to the last 20 years. And the fear here is if we're cutting into a re-accelerating inflation environment, that's going to create a stagflationary environment where, you have high inflation, but you may affect growth because the costs are rising too quickly. Right now, we're in this Goldilocks, period where inflation is high, but growth is strong. So you're seeing that being reflected within the equity market because equity market responds very well to strong growth, but it responds equally well to inflation as well. And we're getting those two dual engines creating this euphoria price action market. Now, do I think the market is completely euphoric? I don't think so. And
It's
the
behaving
reason
that way. It's a very strange thing.
it is kind of behaving that way. But the reason why I'd argue that this is not super euphoric yet is because we've had consolidations over the last 2 months when we had those drawdowns going into our oversold zones. But more importantly, if you look at the year-to-date growth, because we had Liberation Day, the XPX and QQQ have been performing within close to their average. If I look at XPX right now and I look at the year-to-date, it's only up like 13.5%. That's not that high relative to what we've experienced like last year when it was around like 22% or something.
Yeah.
So what I think is going on here is that we're seeing this euphoric action within, over the last 1 to 2 months. But if you zoom out a bit, this price action is just the stock market catching up in terms of lost growth that we haven't got at all in the first 6 months. So what I think is that is the market very exorbitant right now because we have easy money policy? Yes, that's true. But at the same time, do I think it's gonna pop like a .com bubble? No, I don't think so. Simply because we already had a very strong correction in April, and if we were gonna have a melt up, that melt up has not happened yet.
So you think there's actually more room for it to melt upward, to continue upward?
I agree with Ivan there too, because I definitely feel that we've got more room to grow, but some pullback is bound to happen. But I don't think for the next while.
I mean, I'd love to know like on how much though. Like I look at, for example, the other spaces, right? I look at Bitcoin, I look at the crypto, I look at energy, I look at the other sectors, and well, they all seem like, well, except for gold, they all seem like under control. It's just the NASDAQ, and along with NASDAQ, the SPX just seems to be going up and up and up.
Yeah, like I think that the monetary policies we have are now getting increasingly accommodative. So yes, we are seeing price actions that are something that we haven't really seen before in bearish markets. Like we see 8% growth in one day for any small cap companies, Hell, even Oklo, a company that I kind of look at, but I don't always trade, went up like 28% on Friday.
Mm-hmm.
So, like, do you see that normally? No, you don't. I think you only see that in a easy monetary policy environment where you're actually cutting into a financial market that's already, really euphoric. But at the same time, these companies were stagnating and were in bear market territory in the first 6 months of this year. So, if anything, I think we're just compressing all the growth that we were missing, and now we're just laying it all out from September maybe into December. That should have happened, but now it's being catalyzed by 3 rate cuts that we didn't ask for, and it seems that we might be pricing even more cuts as this labor weakness strengthens, because I doubt that a quarter cut is, what I consider proactive. Yes, you're being proactive, but is it enough? No, I don't think so, because they've been holding at these elevated rates for 9 months already.
That's quite interesting, because I see what you mean, right? I think, for example, to address a true labor weakness, there has to be more measures that have to happen. But one thing that concerns me is the rate of acceleration by GDP growth, despite the labor weakness. And we keep harping on about this. I think, especially me, sort of like the last 2-3 months has been, hey, look, more AI investment. Whoa, the market went up 3%. Hey, look, more AI investment. Whoa, look, the market went up another 3%. And so it's just been that on loop, and that has me concerned. That has me concerned about the market valuation. Do I agree with you that I think market is going to grow over time up with the rate cuts that are coming by December? Yes. I think the market should definitely be plus 4 or 5%. I don't feel too comfortable seeing that the disparity between GDP growth and obviously inflation, right? Especially the cost of living and the labor markets and what's happening there.
What do you think if I say that the AI growth, like, it's actually based off of real demand? Like, the money is getting put into what I think is energy. Like, AI is being used so much and the energy costs are so high. And so not only is money being put into the stock market into energy equities, but also the data centers that power these AI companies. And then those data centers need chips and superconductors, which fuels that side of the stock market as well. So I think just because the demand for AI and AI products are so high, that is what's fueling such a crazy, bull rally we're seeing.
Yeah. So I just want to talk about a little bit about that. So I read a recent article on New York Times, and essentially what they're saying is that AI spending over, I think, the last couple of years is now beginning to exceed consumption spending of the average consumer in the American economy.
Not the average. I think it was the total consumption of like the entire.
Yeah, I think it was a total consumption or something. So something along the lines of that, right? And what got me thinking is that I think, unfortunately, we're entering into a period of strong economic growth, but it's a jobless economic recovery. So you're seeing this, massive amount of wealth being generated with AI, created by these leading companies and even startup companies, people who are ingenious enough to start these ideas. But unfortunately, the wealth is being concentrated within the equity market, and it's no longer being distributed through the creation of new jobs. And you're kind of seeing the proof laying out before your eyes. Job growth, is very weak. We have like what? I think was it like 20,000 something jobs like created over in the last report, close to zero basically. And yet GDP is strong. Like, that discrepancy is most likely completely described by AI. And we're talking about the fact that most of these jobs probably don't pay you like, $1 million or $100,000 or something like that. So you have a small minority of people who are benefiting massively from this growth, and a lot of the unemployed labor force out there remain stuck, and they're not participating in the AI economy.
I think that leads to a more deeper systemic issue. I feel like in terms of the short term to medium term market developments, I feel like that's going to have like negligible impact. I think obviously it's something to be discussed and to definitely to be worried about and to be talked about in detail. But I think there's like a less of an impact of that happening in the recent future. Do I agree with you on this topic? I completely agree. And I think to build on what Raj said, we're kind of entering an age which is kind of like when we had globalization in the early 1900s, and when we had like the massive investment into the internet with laying of massive cables across the entire global oceans to connect oceans and continents together through high-speed internet. We had still a lot of expense for architecture made for roads at one point in Canada and America's history, and it seems like we're kind of at an infrastructural stage where we are in fact spending a lot on infrastructure into creating AI as a usable tool for everyone by everyone. My worry is just that I think the valuation is far higher than what the technology has to offer. I get this sense because I work myself as a machine learning engineer, and what I can tell you is that on a corporate level, on a person-to-person level, there's quite a bit of misunderstanding into how AI is, what AI is, what the capabilities are, and what it can and cannot do. And so I worry there's quite a gap there, and the gap is being reflected into the equity markets. That's just my worry. How big the gap is, I can't say, because I agree that the AI is going to be a tool much like the Google of 20 years ago. 30 years ago. It's so sad. 30 years ago. It's here to stay. It's here to stay. It's there. It's shown to increase productivity. It's shown that most of the time AI is being used for personal use. I believe this came out in OpenAI's report on how ChatGPT is being used, and so it's a tool that's here to stay. It's just going to be that how much value is this tool bringing in terms of a GDP scale, in terms of the value it's bringing on a business revenue scale. And so that's yet to be proven, and that's where I'm at. Do I think these concerns are going to play out in the short term? I don't know. I don't think so. But at the same time, it's just slightly unnerving. That's kind of what I have to say on this topic.
Yeah. So, trying to just pivot this.
Mm-hmm.
There has been a lot of different, startups and companies with the implementation of AI. So some ideas I've never heard before. One of the reasons that we decided to bring Raaj onto the platform today is kind of explore what some companies are offering, and why have we been seeing these small caps grow so quickly. So, Raaj, I'm going to ask you a question. What have you been up to so far, and what type of holdings are you currently eyeing right now?
Oh man. Well, I just want to start off and say that I'm kind of just as confused as you guys are as to why so much growth is happening. Like, there's a lot of mixed signals going on, and I kind of just feel lucky to be in the position I'm in. But that being said, to answer your question, I'm mostly investing in a bunch of small caps, a lot of companies that, advertise their company with all these buzzwords like AI and quantum computing, etc., semiconductors and all that stuff, because there is a lot of hype, there is a lot of sentiment around these companies, around this side of tech. And so I'm just trying to milk as much profit as I can, honestly, until something is bound to snap. So a couple of them, namely being BBAI, has been having quite a good week period, following quite a rough history though, because their earnings are really bad. As you can see, their last 3 earnings reports. Man, I don't think you want to check the most recent one.
Oh no, 1,000%
Oh, there you
surprise.
go.
Oh no.
Yeah. So, but as you can see, it doesn't follow the technicals that Anchor, the platform that Kay is viewing the stock on, it doesn't follow any of these technicals, and that's because there's a lot of sentiment behind stocks like these. They think that they're undervalued, and so people buy into the hype and they buy up large portions of these stocks before they actually show any proof of concept. That being said, though, BBAI does have like a lot of contracts with the government, the DoD, Department of Defense, the U.S. military. So there is promise, but as to timing, when we have these crazy bull runs and crazy bear runs, I'm honestly just as lost.
Yeah, I think that would just follow the macros, right? Where if you have easy money policy, companies like this, they're definitely just going to go up along with the mega caps, but they'll just grow faster.
I mean, it sets the environment to grow, but I think, one thing that Raaj has been doing really well has been identifying quite a number of them. So maybe why don't we do this? Why don't you talk about introduce us to a few companies, tell us a little bit about them, and why maybe you kind of like that one.
Yeah. So another company, probably one of the hottest companies for these last couple of months I've been trading, is Rictech Robotics. And like the business model, I think they've got something going. When this company starts partnering with large franchises like McDonald's, I think it's going to like $10-$20 plus.
So RR is like a robotics company, right? So what are they doing exactly, though? Just so we know as well.
Yeah, they're a robotics company. They're basically making a bunch of these preset models of robots that can do different tasks, different functions. Like I think they have a supply carrier robot. They've got like a bartender robot. They've got like a mechanist specialist type of robot for like assembling tools and whatnot. So you can buy basically these shells and train the robot for different tasks that you want it to do. And yeah, it's been getting a lot of traction lately, and the business model is there. It's one of the first companies to try to like sell, in mass all these robots to big corporations.
I think that's
kind
really
of like
big.
It's kind of like a pioneer of this part of the industry.
From what I understand, the competitors in the field are Tesla and closed source labs like Boston Dynamics. But the fact that we're seeing a smaller company, smaller but just by I suppose total valuation compared to the giants, do this, and they're getting contracts already, right? So I remember reason why we got this initial spike up was because of some news, wasn't it?
Yeah, a couple bits of news is I know one big run was due to it being added to the Russell Small Cap Index, and so that gained a lot of traction from that. And I believe they did have some partnerships with another company. I can't remember off the top of my head.
That's okay. And so I mean, looks like robotics is a field you feel like is positive. What are some other fields that you think you could tell us about?
It's pretty connected to the AI space. It would have to just be semiconductors and the giants like AMD and Nvidia, and basically the companies that are associated with them. So the companies that buy up a lot of their chips to make data centers for these AI companies to then also buy, but also companies that provide the resources for these big chip making companies like NVTS, for example, Navitas Semiconductor Group. They have a huge partnership with NVIDIA, and they've also been doing really well lately. So honestly, I'm trying to cover my bases on the suppliers, the customers, like each part of this AI business model. Try to get the people supplying the energy, supplying the materials, selling the actual product. Full circle, just trying to cover my bases because a lot of money is being pumped into this part of the market.
I think that's a very, very good strategy because it's kind of right? But for example, if we have giants like Nvidia, well, who are they buying from? They're buying materials, they're buying energy. So it probably makes sense to look at upcoming firms that are providing that service. And then obviously, when we make all these AI chips, where are they being sold to for data centers? Whether the data center is being used for, I suppose, quantum computing, not less so. I don't think so for that part, but definitely robotics, agentic AI, a lot of these startups. I mean, the one thing we definitely admire about you, Raj, is that you have been quite good at picking out companies, and so obviously we can't ask you to spill your secrets. But what advice would you have to listeners and newcomers on what might be here to stay and what might be a fad?
Honestly, I'll speak out of experience. I think what's helped me the most is just do your homework, but also do your homework to almost convince yourself whether you actually believe in the stock or not. You don't want to blindly follow a recommendation because that's just gambling at the end of the day. And a lot of people say like these small caps are gambling because they could also just be bankrupt next year. You never know with how volatile these small caps are. But if you hear about a company and you think it's interesting, it has a promising business model, do some research, look into the financials, and just keep up with partnerships, news, and events that are pertaining to that company. And if you convince yourself in the long run that it will grow, the second part of it is kind of training your psychology and being ready to hold through red days and being ready to dollar cost average, buy the dip, etc. Because the market doesn't always go up, as I've painfully learned from experience.
I think we've all learned that, unfortunately, but yeah. It's always a sinking feeling to see your portfolio capital just go down and down and down. Hey, but luckily we're on a nice bullish run, so
we're trying to milk it for as long as we can, for sure.
Yep. The environment right now is super pro growth. It's not gonna last forever, but with the Trump administration in charge, with $2 trillion deficits every year, I find it hard to see the economy in the doldrums for next couple of years or so. So in terms of equity markets, I think we'll be fine for now.
Yeah, even I'm looking at the calendar right now for the future, and I don't see really anything that might pop down the market per se. I suppose there is inflation information next week, core PCE, and like personal spending. But I don't see anything like a big event per se in the next 2-3 weeks to necessarily pull down the markets. So I suppose we'll have to see what happens.
Yeah. Except the 23rd, it looks like. Well, maybe don't take any day trades on the 23rd. Powell's giving a speech. You just know. I mean, everyone that trades the market, they're kind of overreactors.
Oh yeah, the market is definitely overreacting in the very short term.
Man, when he declared the interest rate cuts to just those 2-3 hours from I don't know what was it, like noon to basically market close. Just the volatility was insane.
Yeah, it's always the market always gets greedy. We all knew the rate cut was gonna be 25 basis points, and then the market's like, oh, what if on a 10% chance he does a 0.5 cut, and then the moment it comes out, it was just 0.25. All the greedy holders, all the greedy callers, they all got snapped to reality.
And a lot of people expect, like a lot of good traders. I'm gonna shamelessly call out this random YouTube trader that I watch. His name is TJR. He kind of predicted this price action. Well, not kind of. He exactly predicted this price action because he knows, people are greedy. Not only is this rate cut like counterintuitive to the state the economy is in right now, but he knows that people are greedy and people are expecting a bigger rate cut for some reason. And so the beginning of the market, we did actually see kind of like a rally. Like the market was just pumping from open to like 10, 11 a.m. And then as soon as, we got closer to the actual speech, immediate dump. People were just taking profits on these long call options. And that's exactly what TJR predicted. I think he made like $500,000 that day.
Holy.
It's crazy. Yeah.
Oh, wow.
And that's going to be us in the future.
Hopefully.
Yeah. Are there anything else you want to touch on today?
I don't think so. I mean, let's continue on with the markets. I suppose we're talking about a short-term pullback on NASDAQ. Do you want to talk about that, or we should do that for next time?
Yeah, sure. I can kind of touch on it. So we're looking at Anchor System, QQQ, and the NASDAQ at large. Actually, everything. Everything, every asset, even gold, funny enough.
Yeah.
They're all now in overbought territory. So I'm just taking a short position right now, seeing how far this goes. I've bought some put contracts that are due for October 31st. And yeah, that's the most recent trade I've had so far, and we're gonna see if the market's gonna pull back. Now, I have 40 or so days from here to there. Do I think the market's gonna go up 40 days in a row? Absolutely not. So, I'm quite confident that with Anchor Systems telling me what to do, the market will pull back. So that
at least
is
one consolidation event. At least one. Surely one. I mean, if there always is that, 5, 10, 15% chance that there is no consolidation, it just keeps going up for weeks on end. Will that happen here? I don't think so. I don't hope so. Because given that I also have a covered call position going on as well. So
honestly, I'm feeling next week is going to be a little bit of a sell-off. I don't see the momentum just holding through the weekend, but you never know.
It's a great question. I suppose we'll know Monday morning. Do we want to make any brash predictions about Monday morning? I just feel like I can't say anything.
I love to look at the Bitcoin chart, and I'm sure you guys do as well. Over the weekend, Bitcoin does kind of carry the same or quite similar momentum as the rest of the market, like the NASDAQ. And so if looking at the day chart right now, we see like maybe one of two options, two different options happening. Bitcoin rejecting that KRM line and bouncing up, so continuing a bullish trend, because we see that last week or 2-3 weeks ago, it did break through that KRM line. It broke through that mean. So on the day chart, I'm waiting to see if Bitcoin is going to retest and reject the KRM line to confirm a bullish trend, or if it's going to slip straight through, and that'll tell us that maybe a sell-off is coming.
Yeah,
I like it. Front run the NASDAQ with Bitcoin. Always a viable strategy. So I'll work quite often. Hopefully it works again. Bitcoin's been behaving strange though, but I think that's going to be a discussion for the future.
All right, let's call it here, everyone.
Yeah, let's wrap it up there. We have talked for a nice, solid, cozy 34 minutes. So
not bad.
We'll call it here. Thank you for our special guest Raaj for coming on the show, and
thanks for having me.
Thank you everyone for watching. Please leave a like, subscribe, and comment. Bye bye.